I think you can take a snapshot in time, maybe a 1 or 2 year period, looking at some standard moving average levels and see if the stock actually reflects that it relies on those. You know, if you find
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Charles Schwab. I'm your co-host, Joel Alconin, and on the line right now we have Karl Setzer, and he's a grain market analyst at MaxYield Grain. He has spent his entire life and professional career in farming and remains a farm kid at heart. How much time you spend out in the fields there, Karl?
I get around, do some crop checking, and try to get, especially this year, I've been traveling quite a bit, so I've been getting out and checking, seeing what we've got going on quite a bit.
Do you have your own farm? Do you have your own farm where you're out there producing the crop?
I have one in Wisconsin with my dad, but it's more of a cattle operation, and we rent that out now, so I don't have to get my hands dirty too often, Joel.
Yeah, okay. All right, so we're coming to the end of the growing season, so let's talk a little bit about the Midwest harvest. Is it coming in above or below estimates, and what's the yield, and how's the crop looking?
It's very spotty, and it's quite variable this year, Joel. We've got some areas here where the soybean crop came out a little bit less than expected, especially across Iowa, getting into southern Minnesota. A little bit too wet. Excuse me. We had a little bit too much rainfall this year. Some cloudy days. The weather just wasn't perfect for soybeans. Now we're still putting out a good crop, and we're getting good yields in around that 50 bushel per acre mark, which is actually still above the average the USDA has projected. But, it's not the phenomenal yields that were talked about in the south. On corn, we're getting running a little bit better. We've got corn in that, I'd say around our trade territory, that 180, 185 bushels. And for, a state average, I think we're looking at that for Iowa. But we're also seeing some more variability in the corn yields, and I think they're going to drop off. I know in the eastern belt, it's the same thing. It's pretty spotty out there. And one thing with this year's crop that's causing a little bit of concern as we've gotten into the northern part of the corn belt here is the test weight on corn and the quality. Some very light corn being reported in areas. In Michigan, in northern parts up in there, some corn coming in around that 45 to 50 pounds. Now out here in the western belt, we're a little bit heavier. We got some 60-pound corn coming in. It was a little bit lighter to begin with, but it's coming in a little heavier now. So it's all in all, I think we're going to have a good crop. We're going to have big yields, but we already knew that. The question now is if these spotty areas in the north can be made up for from the excellent yields we had in the south.
And this is quite in contrast to what the market was predicting back in July. They were looking for some huge crops and big yields, and they've pounded. I'm looking at corn here. They pounded that. You mentioned the soybean chart. They've taken that down as well here. Does it look like is this just like a little bump up here to sell? I mean, because I know you're not that interested so much in like the the net outcome, but what you're looking to do is cover and have some protection for your farmers here. Are you using this opportunity, and these things are coming off the October lows to lock in some profits, or you just maybe trying to protect them a little bit with some downside puts or some futures in case it goes back down?
No, I'm having, anybody I talk to, I think this has been, a bit of a gift here, this rally we've seen. We've taken up, corn, 40-some cents here. We've taken up soybeans, almost $1 off the harvest low, and this is coming right in, the harvest window. And a lot of that comes back to, it's not really from a fundamental point, anything in the market. That came from a lot of speculative money started coming back into the commodities out of the financial markets. We had the shake up there a little bit in Ebola, a few other things. The Dow looks like it's straightened out here a little bit, but as we're talking here, we've got crude down over a buck a barrel. So we're starting to see some spec buying in this market. That can be very short-lived. So I think anybody who is contemplating making a sale, do it. Make a sale, and then look at once you got your cash locked in and you know what you've got, then maybe look at some reownership, maybe with a call option. From this point out, but you still got to protect that bottom line, and I am really encouraging guys to do this, and not just on the nearby months here, but I think we need to start looking maybe at the 15. Especially on soybeans, if we can get some 15 crop locked in, I'm talking a year out, fall of 15. If you can get some, a decent sale out there and maybe get some cheaper ownership, looking at that too.
Okay, and so what you go from, what you consider your year-to-year basis? I mean, because I know you have, different regions of the country harvesting at different times. When do you kind of close the book on 2014 and start looking at 2015? Pretty much like the calendar year, or do you have a little bit different time frame?
I've already got, clients that I work here with, Joel, that we've started marketing some of the 15 crop for fall of 15. We're actually looking out to the fall of 16 already, putting some coverage on. Not really anything too heavy, because there could, that's a long ways out. There's a good chance we could see something take off, and a global weather problem, some production issues, anything. It's 2 years out, but really it's a kind of a perpetual marketing cycle. I keep guys marketing, month after month, and just keep looking out. And the best part about that is a guy can average everything and look more at revenue per acre and keep his cash flow up.
Do you pay much attention to the charts? I've talked to you before, and just wondered, is there any particular, technical analysis techniques that you like, or do you just try and look at a daily or a weekly or longer term time frame to get a perspective on the markets?
I'm a fundamental trader, Joel. I don't, and I do keep technicals in the back of my mind, but I focus more on the fundamentals and what could happen. And I do think there's a place in every market for a chart, and I do follow them a little bit. You can watch a trend, and a little bit more on the charts when we start seeing what we are now with the the financials and the speculators, because I think there's a little bit more, they're a little bit more on the tech side than your traditional commodity trader. But I do think we have to look at some charts, and I'll look at a daily chart, maybe some moving averages. But in today's market, we are seeing a little bit more influence from the tech side. But day in, day out, corn, soybeans, wheat, your traditional commodities, they're going to stick pretty heavy to the fundamentals more so than anything else.
And so you think some of this buying just could may have just been some short covering from the commercials, and maybe a little bit of a trying to catch a little bit of a dead cat bounce. And along those lines, how do you track the commercials? I know I've over the years have taken a look at the commitment of traders from Steve Breezy. How do you keep an eye on the actions of the commercials?
It's pretty much the same way. I follow the commitment, the commitment of trader report. Keep track of pretty much all that stuff. But it's the thing when you get the commitment of traders report, it comes on a Friday, it's already a week late. Now it can throw you off a little bit, but that's really about the only way you can, other than hearsay through the market, you can. The funds were in and bought X amount of contracts. Well, that's after the fact, though. So
it doesn't do you any good, right?
It's like looking at yesterday's weather forecast.
Yeah. All right. And moving on to the weather forecast, just pretty nice fall that we've had here. Haven't had that that hot spurt. I don't want to put the shorts and the short sleeve shirts away yet, but boy, we're starting to get into November here, and we really haven't had that Indian summer, that 75, 80 degree heat. Does that look like that's gone for now, and how does that affect the harvest?
This harvest has been, it's like we said, and with basis, it's been a little bit spotty this year. In the western belt here, we're running pretty good. The south ran pretty good. Now all of a sudden, we are starting to get into, a few issues. We're seeing them, and again, the eastern belt, there's a definite dividing line east and west of the Mississippi, and we've been running pretty good over here in Iowa. I'm going to put our soybean harvest at about 80-90%, maybe a little bit above that as far as being complete. And we're looking at corn harvest for the state. I'd put it around 60%, maybe a little bit stronger than that. But what I'm looking at now is how farmers are going to use that weather that we've got planning for next year's crop. We get a little bit of an open fall here as far as weather. If it's dry and everything stays good, we can see a little bit more fall tillage, and we might see a few more corn acres or less shifting from corn to soybeans next year. If we can get in and get the crop ready this fall. So as we watch that, we might have a little bit better understanding of what acres might shift, if any do. The eastern belt, like I said, a little bit more of an issue. They're a little bit more delayed, especially you get up in that northern part. They just haven't been able to catch a break, and they're at the point now where if they get a quarter, half an inch of rain in the morning, it keeps them out for 2 days. So it's the weather out there, I think, meaning in the east, is going to be a little bit more of a market factor than what it is here in the west, Joel.
Okay, and before we let you go, what are we looking for? What are the big dates? What do we have to look forward if you're trading the grains? Whether the outright futures or the options. What are the important events coming up?
Well, we got coming up on this Friday will be first notice day on the November contracts. I don't look for any deliveries. Matter of fact, if I saw deliveries, I'd be surprised because as tight as the market is. And really, if we do see deliveries, I'd be surprised if we saw any, but if we get some strong stoppers in there, that'll tell us pretty much how tight that soybean market is. I do think we have to keep an eye on the financial markets. If we keep seeing erosion here and in that side, another injection of money into the commodities would not be surprising. And also, from a fundamental side, we really got to keep an eye on the South American weather right now. Northern Brazil did pick up some rain over the weekend. That's why we're seeing the pressure on the soy complex here. But we're in a global weather market, and it's always changing, so we got to keep an eye on that.
Okay, we've had Karl Setzer on the line. He's a grain market analyst at MaxYield Grain. Spent his entire life in farming, but he's out there helping farmers hedge their crops this year and years into the future. Karl, thanks a lot for coming on the show today. We look forward to having you on again.
All right. Thanks, Joel. Appreciate it.